Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Wednesday the 9th of November. Tonight, don't miss MarketClub TV at 5 p.m. Eastern Standard Time. You can call in or email your questions for the show. You can call us at 410-867-2100, extension 129, or you can call us or email us at marketclubtv@ino.com. Mamma mia, a global smash as Italian yields skyrocket. Italian bonds skyrocket as the euro crashes. Today we received a major sell signal on the euro against the dollar. Today was a game changer as we now have all our trade triangles in a sell mode versus the euro. Next up for this market is 130 in the short term. As we've been discussing for quite some time, nothing has changed in Europe besides a lot of posturing and delay tactics. The bottom line is Europe is in serious trouble, and the man who got us into this mess, Jean-Claude Trichet, has retired and has left the world stage. With soaring Italian yields on bonds, the euro crashing is only a matter of time before we see other fractures in the global financial system coming into focus. For some time now, the gold market has been telling us to be concerned, very concerned about what is happening in Europe. Greece was just the first act. Italy is the main event. The final act will come next year in this three-part tragedy. Oh, one last thing. Don't bet on Berlusconi resigning. He didn't get to be an Italian billionaire by playing by the rules. Now let's go to the charts and the video and see how we can create and maintain your wealth in 2011. Well, first of all, watch the show tonight if you have a chance. It's at 5 o'clock Eastern Standard Time. You can call us at 410-867-2100, extension 129, just on the screen, and leave a message, and we'll do our very best to get you on the air tonight. So let's go to our charts, and let's go to our portfolio. We got a lot of markets to go through, much more than usual, simply because we have so much more going on today. And the first one we're going to be looking at is the S&P 500, which we normally do, but just below that you can see we have a minus 55, and that's the NASDAQ. The NASDAQ is looking heavier than the other markets. It's probably because it's so tech-driven and so forth, but we got 60, 55, 60, 60, 90, of course, gold, which is interesting, and we can go through the other ones and also plus some other markets right there. You can see the US dollar index is 92, proving to be a very strong trend. So let's start off with this market, the S&P 500. Now this is a key level. The 1275 level is resistance, which we pointed out. And also, if you see this market close, this is a key level. If it closes below 1240 and 1237, it will signify that a top has been put in place for this market. And I could see it coming back quite a ways. In fact, we could put our Fibonacci trend indicator in here. We'll go from the highs right here, click, and drag down. And we can see this market coming back down to the 1160 area, particularly when we take out this 1220 area. Very, very key level of support. But I think for the most part, as I said yesterday, I think we'll see this market on the defensive for the balance of the week. Italy is not going to get its act together anytime soon. Greece is still actually a minor player now. All eyes are on Italy because they have more debt than all the pigs. It's Portugal, Ireland, Greece, and who else is in that consortium there? But it's basically not a good thing. They're the biggest, the most amount of debt, and this is a really big deal in the financial markets. That's why we're down so much today in the S&P 500. So those are the levels. There's the levels we're looking at, 1158 potentially, and which is a 61.8% retracement. You've got a 50% retracement at 1184. So let's go to our next market. And the next market we're going to be looking at is going to be a quick one at the NASDAQ Composite Index. It's down today. We actually had a signal, a little red trading arrow in terms of a short term, but that's beginning to roll over. As we scroll this down, you can see this is just tipping over. If we see a lower close, I would say probably below this level here. That would be my guess, around about the 2650 level, below 2650, I think that's going to look very, very heavy for this market and potentially indicate that we'll see a move down to much lower levels. Next market is going to be the Dow, and that's basically the Dow Jones Industrial. You can see a very big red down line in the form of a candlestick chart. We're below the parabolic. If we scroll this down again, you'll see that we're just beginning to tip over, very close to tipping over in that market. And depending on where we close today, if we close under 11.8, I think that's going to be a very, very negative sign. We're currently trading, I would say, right around 11.923, so it would take quite a bit of pushing down from these levels. We'd certainly have to go maybe below the 350 points down for the day, which is not impossible given these crazy markets that we're seeing. We're going to move on. As we said, we have a record number of markets to look at today. I want to get as many of these as we can. This is silver. We've talked about silver. We've got some feedback from people saying, why aren't we bullish on silver? Well, here's why. Basically, our long-term monthly trade triangle is still negative, conflicting with the intermediate term trend. But you see how this market's flattened out? This market hasn't gone anywhere, whereas gold has gone up to challenge the $1,800 an ounce level. And silver has not, the equivalent for silver would have gone up to challenge the $44 an ounce level. It just hasn't gotten there. So I think it's trapped between basically the 36 level and that's $36 an ounce level. And you could refine that down to 35.50 and then 33.50 on support. So this level here at the parabolic, we got the parabolic coming in today at 33.33, easy to remember. If we get down there, I don't think we will, but that would be certainly a red arrow to push this market lower. So next market, of course, is going to be gold. Now, gold is doing something very interesting. If you remember yesterday, we talked about the $1,800 level being its resistance. Certainly, it pulled back from there yesterday, closing at 1787. The high that day was 1802. We've got basically looks like a doji line right now. And that could be another sign that this market is going weary on the upside. We've had all the news in the world to push this market higher. We've had the move higher. And all our trade triangles are positive, so meaning you should not try to short the market, but you should just be aware that we are running into some problems. And what we may do is consolidate between the 1750 area and the $1,800 level to maybe go higher a little later on. But I think that's what we're seeing right now in this market. And you can see our long term is still being bullish from 1430, which we keep saying, intermediate from 1691, and then short term from 1743. So you can see all the arrows, all the trade triangles rather, are positive, indicating that a strong trend is in place. So going to our next market, and that's copper. Now remember, copper, we said the 3.50 level is a key level. It closed below that level yesterday. It closed yesterday at actually moved under that level yesterday, and it signaled a move down, and this is today's action. We've said the copper is copper, we had a signal today to sell copper, but copper is a economic barometer. It tracks the stock market, and of course if the stock market's going down, you're going to see copper going down. This looks negative to us. It looks like it wants to go lower. Our trade triangles, longer term negative, intermediate term a little bit positive, so a little bit mixed signals there, but you can see here we're just beginning to tip over on the MACD, and you certainly are below the PSAR. That's the parabolic stop and reverse. So that particular PSAR is at 375 right now. So again, it's looking a little bit negative for copper. Next market is crude oil. Now crude oil is sort of creeping up. A move to $100, which is like the magnet everyone's looking for, is a 61.8% retracement. And let me just show you what I mean by that, because if I scope this out further and we get to the crux, I move this over here and I grab the highs like right here, pull this down. You can see 100.17 is a 61.8% pullback in a downward move, negative long-term trade triangle. The monthly is still negative from 95.79. I know the market's higher than that. It doesn't matter. It still means that this trend is down for this market, and certainly this 100.17 level, if we get up there, it's possible, is going to be a very, very key level for this market. So let's just scope this in just a little bit further so we can get a closer view, and we'll go to 3 months. But this action here, this is not a particularly good action in my opinion. I'm not sure why the market's up here like this, but it is. It's certainly presenting a conundrum wrapped in an enigma right now. But generally speaking, the trend is up. In the short term, intermediate term, longer term, it's negative. So let's watch that market very, very carefully. Here's the dollar index. We talked about the dollar index, this formation right here. In fact, let me get my illustrator on to share that with you. If you remember, we talked about the dollar index having this move up here. Oh, let me just take this off. Having this move up here, and then having this type of formation. We broke out on the upside, which we thought it would happen. We're now looking for this market to trade somewhere up here between 79 and 80 with the target zone. The close today over 77.50, 77.50. Would be bullish. All of our trade triangles you can see are positive, weekly and the daily and the monthly, all positive. With a plus 90, it is a very strong indicator that the trend is clearly up in the dollar index. So they're going out of the euro into dollars. That's a very big trend to watch here. And as I say, if we're right about the euro going to 130, then I think we're going to be right about this going to the 79.50 level. Now, this is a basket of currencies. This is not just going against the euro. It's a basket of currencies that are weighed against the US dollar. So let's clear the screen. Let's go to our next market. As I said, we have a lot to cover today, so I really want to move along pretty quickly. And we'll be doing this in much more depth tonight on the show at 5 o'clock, so please tune in for that show right here on MarketClub TV. This is the dollar index. Again, this market is just sort of biding its time. It's a plus 55, meaning it's a trading range. We've talked about these trading ranges before, and they can get very, very boring to watch, but eventually trading ranges lead to trends, and that's what we're looking for in this market. We'll see a trend eventually come out of here, and we have to bet right now that the trend is going to be on a deflationary type spiral in terms of the way our monthly and daily is. Only our weekly right here is positive at the moment on this market. So I think given this particular move, if we see we have a resistance at 325 and support at 315, so it's kind of like you're in a limbo in the trading range, but pay attention to that. I think it'd be worthwhile looking at. So let's go to what's going to be our next market, which is like some bonus markets we've looked at, and we're going to go to the next market, and that's going to be Citigroup. Now, Citi's under a lot of pressure today. Certainly closing down here in Citi will not be a good sign in my opinion. We still have a bit of a conflict. The banks in Europe are getting pummeled, and I can't imagine how Europe is going to, the U.S. is not going to reflect some of that. So I think if we close down here, certainly below 29.80, you'd want to be probably short, but you may want to wait until we get our trade triangle, the weekly trade triangle kicks in. Scores minus 75. Now when you get a minus 75, it means that a trend is just emerging. It hasn't totally developed yet. It is just emerging. And I think as we scope down here a little further, you'll see that we've turned the MACD, or the MACD, is turned into a negative mode. We're not yet oversold, so I think we could see some more downside potential in this market. And just putting our Fibonacci tool on here, we can just scroll this down quickly. You'll see we could get down to the 26.50 level, which would be a 61% retracement. It's actually 26.38 if you want to be precise, but I'd sell for 26.50 at this point in time. So let's go to our next market. Next market we're looking at is Bank of America. This market does not look good to us. It's certainly below the PSAR, that's the parabolic stop and reverse. You've also got a move just turning there roughly. We're getting into a little bit of an oversold condition, but this market really needs to close below the $6 level to really be in serious trouble. It's sort of been moving sideways, but again, we have this minus 75, start of an emerging trend, and I think the banks have to be paid close attention to at this point in time. So next market is, we're looking at the SKF, which is a pro shares ultra short. We've talked about this before. Now we're currently trading at 62.65. The key area in this market, in my mind, is going to be the 63.50 area. If we close above that, either today or tomorrow or Friday. I think that's going to make this into a bottom, and I think we'll see this market move back up to probably the 75 area, the 70 to 75 area. So you've also, if you scroll down here, you'll see that we've got a little bit of a movement up on the Williams percent R. We're just about to turn up, depending on where we close today. This could turn up today, and that would be another sign that we put in a bottom. But you also have the PSAR is positive, and we're at the lower end of the Donchian trade channels, meaning we should probably move into the midpoint or even higher in this particular market. So something to watch anyway. Next market we're going to look at is the SDS, which is ultra short, the S&P 500. Obviously, that's doing well today, not as well as I expected. Quite frankly, I thought we'd see more of a range. The high so far today is 2051. We're currently trading at 2025, so we're about 25 points from the high. I would say probably if we see this market close or move over the 2062, I think that would be a very, very good sign in terms of this market making a double bottom and reversing and going higher, and possibly getting back to 23 level. So let's see how that plays out. But lots of things to watch and to look at, and that's why you should tune into the show tonight at 5 p.m. if you have a chance. This is the MSCI Italy Index. You can see we just basically popped down to new lows. If we see a close obviously below the 1250, 1240 level, that would look very negative. How low can this go? Well, it can go quite a bit lower, and if you look at back, we go, let's say, that's the last couple of years. We need to get a little closer than that, maybe the last year. You can see we've been all the way down to 11. So it's very possible we're currently at $12.50 approximately. So if we get down to 11, that's a pretty nice return on capital if you want to short this market. Minus 100, meaning all our indicators are negative, looking for this market to head lower. So moving right along, this is the euro. We talked about this today earlier in the show. And you can see if I just get a little closer, you can see there's the big move down. We said the 36 level was very, very key. All of our indicators are minus on the monthly, weekly, and daily. 35.79 is real time, so that's where the market's trading right now. I think we can trade back down to these levels, the 130 to 132 level. Has it been lower than that? Yes. You just have to look at the maximum we're looking at here. We could get down to 120, and I think that's where the euro is going to have the really super base. But if we make this into a head and shoulders like right here, we could see this market easily take out that and maybe test the 150 to even the 110 level. So very negative in my mind on the euro right now, and that's the first time we've had all these triangles in line. So you want to pay close attention to that market. This is Deutsche Bank. This is a European bank, obviously. It's minus 75, still holding up there. Let's just take this off, get a little bit closer, and look at this market carefully. You can see obviously a big down day today. The low here was 36.66. We're currently trading at 36.96. I would say if we close below this low, it is not going to look good for this market. And you can see that we're turned down on the MACD, getting oversold, but nonetheless, the trend, longer term trend, looks negative. Only the intermediate term trend at 36.72 seems to be somewhat positive. And if we put that in, we can see that's all the way back here. So I think at some point in time, we're going to see this market close lower and be on the defensive, probably for the rest of the week and certainly for the rest of the month, in my opinion. So going to our next market, Banco Santander. And you can see this way out of the loop here. Certainly everything is minus 100, trading at $7.58, and this is traded on the NYSE. And we've heard a lot of people wanted to short this market. I think it's not a bad market to short. And if we look at a little more information, you can see this market's been below 6, so even this level, $7.50, you still have a nice downside potential if we take out these recent lows. And I'll look at those lows right now with you. And the recent lows will be certainly right here around the 7.15 level. And if we go and close below that level, I think we've got a nice trade on the short side. Hey, this is Adam Hewison. It's taken longer than I expected today, but I wanted to share with you all these ideas and trades that are coming up. Lots going on in the world markets. If you have time tonight, be sure to check in to see our show, which is Market Club TV at 5 o'clock. It's live, and we take your questions and your calls. You can email us at marketclubtv@ino.com or call in at 410-867-2100, extension 129, and leave a message, and we'll do our very, very best to get you on the air and the show tonight. Hey, Adam Hewison, I'll see you at 5. Have a great trading day.